Markets have been volatile to kick off the year, so how should investors be positioned? Our next guest says that he has top picks for the year, 5 of them, the first being cash, then software company Cisco, the bank ETF KBW, and the S&P Midcap Value ETF IJJ, and lastly, networking company Adtran. Here to discuss, we've got Dan Niles. He is the founder and portfolio manager at Niles Investment Management. Dan, we want to get into these top picks, but it really stuck out to us that a big tech name is missing from this list, and that's Nvidia. Why is Nvidia not in the list this year?
Well, we've been talking about this really since mid last year, and we put out a post on this earlier this week, which is you've seen really strong AI spending on infrastructure over the last 2 years, and obviously Nvidia has been a big beneficiary of that. But we've been talking about this for a bit now. We think there's going to be a pause or digestion phase in AI spending as you get into 2025. And a good example of this is Microsoft. Microsoft on January 3rd put out a blog post that they were going to spend $80 billion in CapEx. And everybody was, oh my God, that's great, that's a big number. If you actually work through the math on that, they spent $20 billion in CapEx in September. They guided for that to go up in December. Microsoft's fiscal year end finishes in June. So that means that in the first half of their fiscal year, they're going to spend over $40 billion, which means in the back half, it's going to be actually under $40 billion. And so your growth rate on CapEx just from Microsoft goes from nearly up 70 to 80% year over year for the last year and a half, will go to basically zero by the time you get to June. And so that's just, and by the way, they're the biggest CapEx spender on AI infrastructure that exists. Obviously, they have that relationship with OpenAI that helps drive that. And that's not something that people are focused on. So that's the big reason Nvidia or any of the Mag 7 are not on this list going into this year. And that's also, by the way, why cash started off the top picks, because I think a pause in AI spending, when you've got so much of the stock market related to AI, and your first question out of the gate was on Nvidia, which shows how much focus there is on it. That's going to be a drag on the market if there's an AI digestion phase coming.
Dan, before we dig into your pick specifically, just zooming out just a bit and just taking a look at, we have the inauguration happening in just over a week from now. Trump policies when it comes to the influence of some of those larger cap tech names that you've just listed, is it a positive for that group, a negative? I guess, how are you evaluating that? I know you're very, very focused on valuation, where we're seeing play out more so in the market dynamics, but how does policy fit into that?
Well, policy fits into that in the sense of, well, what sectors does that favor? So if you approach it from that standpoint, really over the last 5 years, it's really all been about AI or internet infrastructure, starting with COVID, where internet infrastructure was the big investment, then you have AI. Well, what's Trump focused on? He's focused on deregulation, cutting taxes. And that benefits more of the small and the mid-cap type of names, because the biggest companies in the world, they get very low borrowing costs. They don't care. They don't need a tax rate, and they can, to go much lower, they can amortize fixed overhead over big amount of revenues. The smaller and mid-cap names, they don't have that advantage. So for them, this is very helpful. And then you look at the multiples, especially in the value sector of this, those multiples for value, small and mid-cap, traded about 17 or 18 times trailing PE. The S&P 500 trades at 25 times because the biggest stocks have driven the market up so much over that period of time. So if you look at it, for example, over the last 5 years, the S&P is up about 82%, but the small and mid-cap sector has actually underperformed that by 35 to 49%, which is why you have this wide disparity in the valuation between the two. And in an environment where the Fed, and I started this year saying, I think there's a close to a 50% chance the Fed doesn't cut at all, and they could potentially raise. And with the jobs number this morning, that's even more likely. I think you've got to really start thinking about these policies really benefit stocks other than the S&P 500.
Well, let's end there, Dan, because your top pick for the year is cash. How risk off should I interpret that pick being?
Well, I mean, the last time I picked cash as a top 5 pick was in 2022, and the S&P went down 19%.
Key
And you got
indicator.
pummeled on, yeah, and you got pummeled on bonds as well because remember, inflation was going up. So yes, given that and given what I've written, which is I think the upside in the stock market, if everything goes right, is it's up 10%, but the downside is down 20 to 30 because multiples compress because inflation comes in higher than what we're thinking and the Fed doesn't cut, in fact, pauses or raises, then yes, obviously, cash is in there for a reason.